Welcome to Fintech Daydreaming, the podcast that dives into the world of banking technologies and the ever-changing landscape of fintech companies. We bring you real-life examples from global and local thought leaders, as well as experts working within the financial industry, and seek out the best stories from the front lines of financial services innovation, where dreams of industry pioneers meet reality. Hosted by Krogdahl and Ville Sointu, this is Fintech Daydreaming.
Hello, old and new friends, and welcome back to the world of Fintech Daydreaming, the podcast that takes a refreshing look at the ever-expanding fintech sector and all things related to banking technology. If you are new to the show, then we are glad you found us and hope you will stick around at least until the end of this episode. And if you do like what you hear, then maybe consider hitting the subscribe button and let us know what you think of the show and this episode in the comments. You see, you making comments on the podcast channels actually helps us to grow and gets us more visibility. And more visibility means that we get more excited about doing these shows and bringing on the fantastic guests that you enjoy us talking to. My name is Krogdahl, and it is great to be back in the driving seat after having had the last two episodes expertly driven by my fantastic friend and co-host, Ville Sointu. Sometimes we do have a hectic schedule and heavy commitments at work, and it can impact your free time. I'm sure we all struggle from time to time with work-life balance. So it's actually quite great to have a show like this, which is hosted by two people, where sometimes I can step in for Ville and sometimes Ville can step in for me. And that makes sure that we always get a fantastic episode to you, our dear listeners, every 2 weeks. But dear listeners, summer is fast approaching. The sun is heating up the lakes here in Finland, the land of 1,000 lakes. And the family and I are starting to plan our summer vacation. And I dare say, actually, my children are really getting excited. They are counting down to us going away on holiday and enjoying the Finnish countryside. But I started wondering, Ville, have you planned anything yet for what you're going to do for the summer?
Hey, Paul. First of all, thank you for the kind words. I sure enjoyed hosting the past two episodes, and I'm looking forward to this one as well. Me on the kind of co-pilot seat this time around. But summer vacation, yes, I did have plans. Originally, my plan was to do the same thing every banker does in the Nordics, which is to take July off and be on the countryside. But then I changed my plans a little bit. Now I actually decided that I'm hoping to get my first COVID jab soon, which would mean that I should be hopefully okay to travel already towards mid-August. So I actually moved my summer vacation to August. So now I'm going to be working all July, and then in August, hopefully be able to travel a little bit. But we'll see. Things move, things change. We never know whether even the vaccination is going to help us travel, but we can certainly hope for things like that.
Absolutely. And Ville, as is traditional for us, do you have a joke?
Yes, we have an actual listener joke, or I should say a listener joke and a half, because I got this from Oleg from Poland, but he wanted to make sure that everybody knows that this joke is not his original joke. He actually heard it from somewhere else, but still it's a very fintechy, nerdy joke, so we're going to go for it. Now, we discussed before in our podcast about Elon Musk's interests into Bitcoin, and I guess lately Dogecoin as well. But Paul, do you know why Elon Musk doesn't like Ethereum?
That's a hard question. I must be honest and say I haven't got the foggiest.
Because Ethereum runs on gas.
Oh man! Oi, oi, oi. That is a fantastically good bad joke, and I think with that we better get on with the show, guys. Now, one of my passions for a longer period of time. And I suppose you could actually say an area that's in focus in my daily work has been the platformification of banking and the banking industry. Even before we got PSD2 and the fast train to open banking, I was socializing the idea of making banking services and banking data available to a wider community of partners, developers, ecosystems through open APIs. And sitting where we are today, I think there is no doubt that the future of banking will be dominated by platforms and the growth of super apps and the development of new business models and, dare I say, business architectures. I would probably go as far as to say the future type of bankers that we will have a radically changed profile and skill set to the ones of yesteryears, with a much stronger focus on technology and platform thinking, but with a strong alignment still to the foundations of banking business. I'm actually wondering, Ville, maybe we should term a new coin here in the FinTech studio. How about full stack banker
coin?
Full stack banker coin. I like that. Okay, fine. So what is the writing on the wall for the big banks in the banking industry, I wonder? Well, the general banking clients and consumers are no longer looking for generic interactions with their banks. People like you and me, I remember an interesting statistics, you know the word I'm trying to find, that was done some years back that showed most millennials would rather visit their dentist than their bank. Now, I say that is demonstrating how painful a lot of interactions and experiences can be with the banks, and the sort of feeling that we've got when most consumers today are looking for contextual banking, faster payments, value beyond banking, and all the cool stuff, and to be treated as individuals with unique needs and desires. And with the growth of platforms and the global big tech companies starting to move into the banking space, this is fast becoming the reality and norm for most people. But are the incumbent banks managing to keep up? We've been witnessing a fantastically strong trend of emerging technologies shaping the banking industry, taking us from PSD2 to open banking, to contextual embedded banking, to banking as a platform, and now to banking as a service, where non-bank companies can deliver full end-to-end banking capabilities to their customers without holding a banking license or even operating as a bank at all. The question is, where will this all lead? And how will the big old traditional banks engage and keep up? Luckily, our guest today is someone who is smack in the middle of all of this, with fantastic insights and strong, interesting points of view, I hope. Dharmesh is the CEO and founder of AskHomey. His industry leadership is built on 30 plus years in the banking technology industry. He initially worked at Lloyd's and created their vision for the single customer view in 1992. He then moved on to NatWest, where he pitched the concept of franchising banks, an early concept, I think we could say, of banking as a service in 1995. Now, during the dot-com era, he launched some of the first internet banks in Europe and the world's first online insurance solution. In 2001, he created a no-code platform for web and mobile interactions and sold that to Temenos in 2012, where he went on to become their chief digital officer. He is now the CEO and founder of AskHomey, a fintech focused on creating a platform and ecosystem to help owners manage all aspects of their home. Something I think I actually need, and maybe you, Ville, with your new apartment as well. So welcome to the show, Dharmesh. how are you on this beautiful, fantastic early summer day?
I'm really good, thank you. And I'd like to say, thanks for inviting me onto the show. I'm really honored to be here and quite excited by this topic. It's, really hot on the agenda at the moment.
It absolutely is. And we are really happy, Ville and I, to have you with us here today. But before we dive deep into all things associated with as a service, could you maybe tell our listeners a little more about your background? I mean, who is Dharmesh to his family and close friends?
Oh, okay. Thank you. Well, look, I'm an average guy, right? I'm a family guy. I've got 2 kids. I say kids, but, they're like 21 and 25. One has left home. The other one, I'm trying to edge out the door as we speak. But other than that, I'm obviously as a Brit, I'm a football fan. I support Liverpool football team. I wasn't in support of the Super League before I get flamed on Twitter. But I do support the team, and I have been patiently waiting until last year for us to win the Premiership after so many years. But apart from that stuff, I guess I also run a lot as well. And I've done, everything up to a marathon. I've done the Marathon des Sables, which is the 6 marathons in the desert. In the Sahara, it's about 45 degrees. You carry your own food for the 6 days. And yeah, it was very, very hard. I guess now I do more like the longer ultra. So in fact, actually this weekend, I'm running 100 miles from Richmond in London to Oxford, up the road. Well, 100 miles up the road. So that's the kind of thing I like to do in my spare time. And I guess another passion of mine, because I've been doing it for a number of years, is that I also like writing. And so I've been writing on places like Finextra. I have my own WordPress site. But currently I write for Fintech Futures and also Banking Technology magazine. Mm-hmm. And yeah, so that's me in a nutshell. I guess I also, like food a lot. But I have to say that the running affords me to eat well. Otherwise, I would be twice the size.
Yeah, no, I think I've got partially that problem these days. I used to run some marathons. I've done the Stockholm Marathon, Helsinki Marathon. But the last marathon I did, I pushed too far through the pain and damaged my knee. And so it put an end to my marathon running, but it didn't put an end to my large consumptional intake of food. So I've noticed a difference over the years. So maybe I need to find some other way of keeping the weight off, I think. But I mean, the focus for today will be on the growing banking as a service sector, as we said before. But before we go there, Dharmesh, maybe a quick intro to your fintech company, AskHomey, for our listeners out there, and maybe interest Ville and me in what it is you've got there. Maybe we could become future customers.
Sure. I mean, look, www.askhomey.com, you can register on site. It's a free site for homeowners. It actually, what this has come out of, right, is a couple of things. Firstly, the vision behind this was very much, I remember growing up as a child, and my dad's business was a little bit shaky, and there was discussion with him and my mum about whether we would have to sell our house and move into the shop where, it was an area I didn't want to move into. But then I also remember them, like struggling to pay the mortgage. I mean, at one point they were paying 14% interest, right? And that's when people really struggled. And, when I looked at the property sector, I kind of said, well, actually, who is helping the homeowners? It's not got any easier. In fact, actually, things have got far more complex, right? And, now you have to sign up for a site where they switch your gas or electric. You have to sign up for another site, if you want to get some financial advice. You have to sign up to another site if you want to get something fixed. And all of this stuff is, quite frankly, quite a headache. If you look at the numbers, a homeowner spends about £11,000 a year just on rent and basic, bills, right? But they have an average, unsecured debt of 15,000 and a secured debt of 132,000. Just those numbers alone tell you that actually you need to be a bit of an accountant really to manage that well. So really the point of AskHomey is to kind of bridge this gap, to make things easier for homeowners, right? The thing that we all aspire to, I want to help you to protect with a portal that allows you to manage the things that you want to get done, the important information about your property so that it's made available at your fingertips, and it's turned into insights that will help you to save time and money. And then finally, obviously, the key part, which is about helping you to manage your money, right? Because we all know banks give you an account or a mortgage, they'll help you finance the purchase, but that's it in terms of helping you thereafter, right? So really, that's really what AskHomey is all about.
Sounds really interesting and good for most homeowners out there. You're sort of talking about it from a UK perspective. Is it only focused on the UK market, or is it global?
It is a global platform, but initially, because a lot of what we do within there is pull in data, right, to help you to understand how much you should be spending on certain things, etc. So, there is local data feeds that make it UK specific. You get more out of the platform if you live in the UK today. But over time, as we roll out to other countries, we'll be plugging in those similar data feeds for those countries. But to be honest, at the moment, right now, you'd have, the only difference is that if you lived overseas or you had a property overseas, you'd have more data entry to put into, right? As a non-UK citizen.
Okay, I'll register, give it a go, and give you some feedback as a expat Brit living in Finland, right?
Brilliant, thank you.
No, you're more than welcome. We'll maybe even try and get Ville to register as well. So, but
I mean, there is a tie-up here with what we're about to discuss,
yeah,
right? Which is about the kind of banking as a service and that kind of whole phenomenon. But I mean, let's move on to that topic, and I'll relate it back to, why AskHomey as well.
Fantastic. Yes, that's a perfect lead into to the whole area of the growing banking as a service sector. I mean, it is one which is poised to fundamentally blur the lines between banks and non-bank entities, where we see platforms and lifestyle apps starting to offer banking services delivered by existing licensed banks, hidden behind them as a service. I often get engaged in discussions with people who struggle slightly with understanding where banking as a service fits in relationship to the sort of growing open banking and the banking platform as a service offerings. Maybe to help our listeners out there, as one of the experts in this domain, and back to what you just said about AskHomey, how would you define the scope and differentiating elements of banking as a service?
Yeah, it's one of the, I'm not surprised that people are confused, because it's one of those things that when you're in the vendor community, you see this train has this buzzword on it and you see all momentum on that train. So you just want to jump onto that train. That happens with things like CRM. Suddenly hardware vendors were doing CRM, right? So I'm not surprised with the confusion. But from my perspective, one is something that was regulatory driven, i.e. open banking, right? The other, banking as a service, is a business model, right? And, the difference between the two is not only that, but with open banking, the regulators kind of brought this in to drive innovation and to create competition in financial services, right? And we know it was lacking because banks were typically growing at less than, single digit percentages every year, right? Probably about 5-6%. Yeah. And we know that they were holding back therefore innovation because they had majority of their customers. We saw the market consolidating into a fewer and fewer players, right? And if we weren't careful, these players would dominate the market and really not do anything more because they own the client base, right? So the regulators had to step in, right? So what the regulator said is like, you have to open up the data. As if the customer owns that data, the customer gives permission to a third party to access their transactional data, you must allow it. The other thing they said is if the customer allows you to a third party to initiate a payment, you have to enable it. So open banking only opened up two things. Firstly, it allowed, it mandated banks to provide data on account-based products if the customer requested it. Secondly, it allowed third parties to initiate payments if the customer requested it. So really kind of two transactions, right? And the other thing was it mandated. On the banking as a service side of things, this is a switch, right, towards a different business model. It's absolutely different to being a bank, right? Being a bank, you sell accounts, mortgages, loans, and other financial products. Providing banking as a service, you're really operating on providing technology through a set of APIs. A set of APIs which is much broader than open banking. It's not just about account information, and it's not just about initiating payments. Now, a misnomer, people think, well, you know, I just need to access the account information. Why would I pay for it from a BaaS provider, right? The BaaS provider might say, well, look, open banking, you're just going to get the base transactional data. If you pay me, right, I will also give you categorization information on that transaction. I'll also give you a wealth of other information about the transaction that could be useful to you, right? Like where the payment was made, who the store was, the type of category, you know, the actual physical location of the transaction, how the payment was made, etc. I could give you loads more information, right? But you have to pay for that, right? Yeah. So there is a monetization opportunity, but you have to provide more than what open banking mandates. But really banking as a service, a couple of other misnomers. Another one is that it's core banking in the cloud. It's just about allowing other people to set up accounts or to, you know, provide loans and mortgages. No, banking as a service is about granular services. It's about anything in banking provided through an API, right? Mm-hmm. So that could be, you know, I can use an API to credit risk check my tenants because I'm a landlord and I have to, you know, want to make sure they can pay their bills on time. Or I can do a KYC check because, you know, I want to make sure that the tenants that I bring in are, you know, very good. Or I could do, you know, credit risk assessment. Oh, I said that, credit risk assessment for any other aspect of banking, not just the actual products themselves. So it could be very granular, or it could be, you know, quite a big thing like providing a product, right? But banking as a service really is the breadth of that. And how the players differentiate themselves will be the breadth of services that they provide. We are already seeing some specialization, and I would put this as a subcategory of banking as a service, you know, and the first one being really that's scaling up is payments as a service. So people have decided that actually payments and their rails, etc., you know, people need to access that and enable that through an API. So there now are players that specialize just on the payments piece, right? Now, sometimes they will be called banking as a service providers, but it's only that part of banking that they're providing, right? And that's where I think some of the confusion also comes into play, is about the scope of banking as a service. I do think, you know, that actually, you know, this whole terminology is very confusing because there's two sides to the banking, to BaaS in effect. There's the provider, and I like to call them experience enablers, right? You're an experience enabler because you're providing some code that does something, right? But the actual experience is of me letting out my house. And I wrap that your call to do a credit check into that, right? And for me to do that, I'm an experience owner. I own the experience of managing landlords, or I own the experience in the case of AskHomey, right? I want to own the experience of managing homes, right? And helping homeowners do that through a platform. Within there, I will embed things like taking payments and, you know, getting loans, et cetera, right? But that's not the experience that I want to own. I want to own the bit about managing your home, right? So that's really, you know, the difference, I think. I like to kind of separate the two. One owns experience, the other one enables them, right? And really the fact is that some banks will be able to own some experiences, but nobody will be able to own all experience because they're too wide and varied, right? And that's how the innovation will really come in.
Fantastic, fascinating. I also believe partially there is an element about offering to piggyback on the bank's license and the license to operate as well, right? So that the third party that's taking advantage of the banking as a service capabilities don't themselves need to have a license. They can rely on the supplying bank in the back end to have the license and to be able to operate as a bank. Is that a correct understanding?
Yeah, I mean, what they're doing is kind of, so if you don't take the banking license, right? So to operate as a bank, you have to have a license, right? But you could be a white label on top. This is typically how the banks worked with, retailers in the 90s, right? The Tesco's and Sainsbury's, etc., partnered with banks. The bank was actually providing the banking and was the regulated entity. And as long as in your product materials, etc., you make that very clear that the actual banking is done by Royal Bank of Scotland or by NatWest or Lloyds or whatever, right? Then that's okay, right? The remit in terms of anything going wrong with your account or your financial product actually lies with the licensed entity, right? But there is no harm in you being a distributor of that financial product. And that's really, I think, the thing that we're going to see the biggest difference. This isn't about, manufacturing and distribution separating. I've talked about this in the past. I've said, manufacturing and distribution is separating in financial services, but actually distribution is just about reselling a product, right? And what banking as a service does is allow you to enable experiences as a service provider or consume them and define and own a particular customer journey or service, right? And that's very different to just reselling, financial products. So I think in the case of, let's say, you just want to do a credit risk assessment, you don't need a license to do that, right? You just need permission from the bank and a relationship that you're going to have. And that's what you're provided through the BAS side of things, right? But if you want to sell financial products, you either have to have a license or be backed by somebody that does. Yeah.
Yeah. No, very well explained. You mentioned Tesco's there. I think Tesco's probably is a really good example, although a bit dated now. Do you have any other fantastic good examples that people could relate to out there?
Yeah, I mean, there are a number of players, on the real estate side of things, like Credit Ladder and a few others that have turned things like deposits into kind of almost like an insurance, right? But they're using third parties, right, to underwrite that. They're not doing that themselves, right? And that's one example, right? Another example is, again, in the real estate world, a number of players like Hammock, which is essentially a bank for landlords, right? Is providing things, not only the accounts, but they're also providing things like KYC checks, etc. And again, they're getting those from a bank or from a BAS provider rather than building everything themselves. On the flip side, you can see somebody like Oak North as a bank, right, providing financial products like loans, and they're providing credit risk assessment as a service to third parties, right? Because what they feel is that with their data and their expertise, they're doing it better than most banks, right? And they're not competing on that for their own clients. So why not offer it as a service and make money out of those transactions in effect?
It's a fantastic business model. I mean, I can understand why many of the banks have expanded into this business model. I mean, after all, it's giving them an additional revenue channel to continue to grow in a fairly disrupted industry. But does it not also put them into basically a commodity model, similar to what happened to the telco industry in the past and the mobile operators historically? Is there not a risk here that the banks become further separated from the customers and the focus on their customers in this model?
I think in the long term, yeah, absolutely, there is, right? And this is still following this phenomenon of manufacturing and distribution separating. What we'll see is that the people that are creating financial products, managing the banking license, right? They'll be scale players. They'll, by doing this for lots of people, they'll be able to bring down the cost of transactions, the cost of ownership, of having a banking license, right? To the point where, they can do things far cheaper than you having your own platform to do it yourself, right? So it becomes easier to buy, a manufactured product than actually to manufacture it yourself, right? So I definitely see, that side of things. There's going to be some players, and maybe they start off as banks and move into a BaaS model, right? Or they are technology players that have acquired a license. And we've seen this already, right? They're either partnering with a bank to do this, or they've acquired a license. In the US, some people, some of the new startups are acquiring credit unions. Credit unions see potential a way out for them is to sell their license, right? And to handle some of the back office processing that the tech startups don't really know, right? But that's, that's clearly, on the BaaS side of things, this is the opportunity, is that I can host a platform by running it for lots of more companies and their clients, right? I have to scale, which is why it needs to be a cloud native solution, right? And they can provide at a lower cost, right? And, I survive because I'm taking pennies, but on millions and millions of transactions. Now, you draw a parallel of this to the telcos. Telcos started off selling products like call packages, right? And you made a few calls, you got charged, and that was it. Then they had to go through a dramatic shift as things moved to texting, and there were billions of texts, right? Literally going from, a few millions to billions within the space of a couple of years. That meant that the telco systems themselves had to account on a much more granular basis, right? And they moved towards cloud native architectures well before banks ever thought about it, right? But then, they also, after that, had to start to account for data and the bytes of data, because they had to bill on that. So their systems had to scale. But that's already happened. And so some of those players already provide, the actual, 5G license or 4G licenses through to other people as distributors who package up a handset and some core packages. But the underlying, rails in effect for telcos are being provided by one of these other core providers, right? So that's already happened. Same thing's going to happen in banking, right? That's not to say that everyone's going to jump ship straight away, right? For some people, they'll stick with their bank. It's, I know customers, or we've spoken to customers, certainly when I was consulting, we spoke to a small building society that had almost over 150,000 customers that would not give up their passbook, even though they've been told that your interest rate is 0.01 or something stupid, minuscule, right? They just felt that this thing was that meant they had their money, right? And they could see it, right? And you can't change some of that behavior. And you're going to get some people that say, look, I know I can manage my house better, right? Through a platform, but I'm just so used to doing everything for myself. It gives me, great pleasure in finding every single penny that I could save myself, right? So some people won't change. Some people say, that's got to be more convenient. I don't want to have 15 different passwords. I don't want to work out what's best. If they get it 80% right, that's still better than me spending time to try and get to that point, right? So in that case, we'll see some people moving on to newer platforms, newer experiences, better experiences, right? But it's not a replacement strategy. I think, what we're seeing right now is, yeah, there's been some switching, but what we're seeing is a layering. All these things will come. The first layer that we've seen so far since last year is better banking, right? Or since the last 2-3 years, people like Monzo, Starling, etc. have come along, just said, we're digital, we provide better experiences, right? That's just banking done better, right? The next thing we're seeing now is experience-driven banks, right? These are the experience owners. People saying, well, actually, the customer segment, I'm not restricted by geography anymore. Therefore, I want to own the experience for, the Black community, or Black entrepreneurs, or for women, business founders, or for a segment that, is homeowners, or a segment that is landlords, etc. All of these, when you're not geographically constrained, are fairly large customer segments. In the UK, if you just target homeowners, well, that's 28 million households. If you target contractors, that's 4.5 million contractors. If you target landlords, there's 2.5 million landlords. They're sizable customer segments that you can operate on a low-cost basis in the cloud, right? But have massive reach. And that's the next layer I see coming now, is experience-driven banks. I don't see people switching necessarily, but I see people saying, well, actually, you know what? I'm going to manage this set of money for my household here. This set of money that I do for my contract business, I'll manage here. And this is my spending account. That's where I spend my beers and my lunches. So I see more maybe shoeboxing or, pocketing of cash in different accounts. It's for the best job, right?
Yeah, it's definitely a shift and a new way of dealing with customers. I'm just wondering, if we step to the world of the incumbent banks, the large banks, Ville, as someone who is working for one of the largest banks here in the Nordic region, is this a space you think that the Nordic banks will be moving into, the whole banking as a service paradigm?
Absolutely, and they have been. Even my employer has been for a while now. But before we actually get into that, I want to pick up on a couple of things mentioned here in the conversation so far. Super interesting. First, the kind of comparison between telecoms and banks. Anybody who's talked to me for more than 5 minutes in any working context knows that I love to make that comparison myself. One aspect of it, of course, is this capability to do real-time charging decisions, and another one that I always talk about is the telecom transition from a fully postpaid model, which involved risk modeling of the customers, into a prepaid model, which effectively eliminated the onboarding risk for telcos, and therefore made the telecom products available pretty much to anybody. So even today, there's more mobile phones than toothbrushes in the world, for example, and I think that's at least partially thanks to the invention of prepaid as a risk eliminator in that equation. But I digress a little bit, because another one that I wanted to pick up was this kind of analogy of the distribution and manufacturing. And I'd like to actually stretch that analogy a little bit, because now we're also seeing that if banks traditionally have been the manufacturer of these financial services, and now the distribution is being democratized, I think on the other side of that is, of course, the quote unquote raw material supply chains, which are also kind of under pressure to be democratized in the future. So it remains to be seen whether the manufacturing of incumbent financial institutions is as efficient than other entities perhaps entering this space. And this kind of democratization of the full value chain is super interesting. And that brings me to my to my actual question. When we're going to see all of these shifts happening, different kind of providers moving into different spaces and providing banking as almost like this collection of atomic services, if you will, in the heart of all of that still remains trust. And I think incumbent banks especially like to think that trust is their most valuable asset, the thing that they need to preserve, and they believe that they will preserve even in the future world, whatever that might look like. So kind of in context of this discussion, so from a consumer perspective, you need to trust somebody with your money, with your financial life. In this model where the distribution can be pretty much anything, and a lot of the kind of banking services are almost like invisible by design, how does the concept of digital trust and trust distribution work in this equation?
I think you see things like, I like to draw parallels, right? And I was buying a laptop or helping a friend buy a laptop, and they didn't say to me, I want a Dell or whatever. I just said, I don't mind which one I get as long as it's Intel inside, right? And inherently what they were saying is that, I trust Intel for, giving me great compute power, right? And it's strange that, Intel don't do laptops, etc., but everyone knows who they are if they've got a laptop, unless you're on the Mac side of things. Anyway, But I see the same kind of trick. It's a brand positioning thing. And I think that's really, you know, the banks have done that really well. We know, you know, at some point, you know, if I really value my bank and I want to be able to contact, I know that I can speak to them or whatever, right? And that's why I don't see a lot of necessarily wholesale shifting, you know, like I never deal with my incumbent bank ever again. I'm not seeing a lot of that in the stats and the numbers, and certainly on the customer feedback. You know, I'm seeing a lot more of, well, okay, I'll manage this kind of money over here now, right? So much more of a layering. So I think banks have to work hard to kind of build and retain that trust. And even though, you know, pretty much every bank has had some kind of outage, etc. You know, most banks have had some kind of scandal on shareholders or whatever, right? You know, they've still retained their client bases. I think what's happening, you know, as a much more underlying macro trend externally is, you know, the transparency of these kind of things is getting louder, right? I think they were always there, but I think it's getting much louder. Now we're starting to, people really question the brand values. You know, what has this bank done for, you know, its clients during COVID? What has this bank done towards sustainability? You know, what's its kind of real ESG values, etc. Some of those things are starting to get exposed and really help you decide which is the bank that you trust or you should be on side of, right? Because, so, you know, if you're part of a bank and, so, you know, certainly I would feel uncomfortable if I was part of a bank where it was very clear that, you know, the C-level were taking all of the profits. And then when it came to COVID, they gave no support to their client base, right? Or that, you know, they were twice as worse as any other player, you know, from a carbon emissions perspective, right? I think we're starting to make much greater value judgments. And that's really where I think, you know, some of the newer players will struggle to build that because it takes time. And also it takes a lot of presence, I think, to kind of achieve that.
So yeah, reputation and values aligning with your thinking is of course a key kind of component in trust. But what about the default answer of the banks? So regulation, supervision, and related consumer protection laws, for example. How do you see that space playing a role in the kind of concept of trust in the digital age?
I mean, I think, look, we see that the regulators are working from both ends, right? You know, on one side, they're opening up data through things like open banking, and I'm working in other industries that are trying to leverage, you know, what we've learned out of open banking into areas like utilities and retail, etc. Right? And then on the other side, we're seeing that the regulators are also working on to protect, you know, data through things like GDPR and privacy rules, etc. Right? So the regulators definitely play a very important role. I think this is one of the things that helps, you know, that kind of forces almost this model that, you know, scale plays, because actually regulations is really expensive, you know, both in terms of complexity, time, effort, you know, you name it, right? It's a big activity in a lot of banks. And if you look at some of the fines, you know, especially around KYC, AML, right? You're in talking about, you know, banks have been fined over billions, right? And so, you know, I can't see necessarily, you know, that banks of the future that are small be able to carry on their own, right? I think there's almost an inevitability that you have to go to somebody that has scale and can manage that cost through lots, you know, a much bigger presence. And there, I think, you know, comes in the trust factor as well, is that, you know, with the adoption of proper security and then, you know, being able to handle, you know, the regulations, etc. You know, this is why you choose this organization. It's one of the factors of choosing one of the new distribution players is who you're backed by, right?
Yeah, and that kind of brings me to my final question, which is that, so where do you then draw the line with regulatory supervision? I mean, right now we're seeing fintechs, of course, like yours, being kind of in the regulatory space, but then the deeper you go in the stack, the more supervision will you get. So what do you think is the best model for that? How do we kind of make sure that we get innovation so that we don't strangle them with regulation? And on the other hand, retain the trust that the public have towards supervision?
I think when it comes, I mean, financial products are hugely complex. We underestimate, account because it's just debits and credits, but actually behind it, there's a whole load of things around fraud and risk, etc. Right, and then also credit. So, that side of it, is always going to be there, right? And that responsibility has to be with the manufacturer in effect, right? They own the license and the financial products. What we've seen with open banking is a slight delegation where, the regulators introduce the concept of a trusted third party. I'm allowing this we vetted these people to act responsibly with banking data, right? Typically, the API aggregators, but there are other players that you can apply for, payment initiators now as well, right? So, the regulators are brought in with open banking, a kind of new kind of category of, let's just make sure that these organizations act responsibly when they're capturing data, right? And it's huge amounts of valuable data. So I think that will carry on. And certainly, I'm working in the real estate world where, we're looking at that same concept, that actually, look, when it comes to property data, yes, it isn't personal to me, but it has a value, and maybe that, needs to be captured somewhere. But we can't just give open access to any property data. There has to be customer permission given for it. So that kind of model, I think, works really well. And I think, quite frankly, open banking is not only driven competition and innovation in banking, but it's going to drive it in everything that we do, whether it's like open, gas and electric bills, open patient records, open retail, it's transformational.
I think the whole area of compliance, regulatory compliance in this growing domain is fantastically interesting. And can you guys hear my phone ringing?
Yes.
Yeah, I really apologize for that.
All right.
But that happens sometimes. I should have gone into flight mode. I think this whole area is fantastically interesting. And I think maybe it's an episode that we can have in the near future, Ville, particularly around the sort of growing buy now, pay later, etc. But guys, time flies ridiculously fast when you're having a good time like this and fantastic discussions. It's time for us to close out yet another episode of Fintech Daydreaming. But before we do that, Dharmesh, Ville and I would like to give you a chance to let the listeners know how can they find you and get in touch if they want to know more about you or your fintech.
Sure. Look, firstly, let me just say really thank you again for bringing me on to the show, giving me the chance to kind of talk about a topic that's very close to my heart. So really appreciate that. And you've been perfect host. Great questions. But, if you want to contact me, just look me up on LinkedIn, Dharmesh Mistry. You'll see me there as CEO of AskHomey, or my Twitter handle is just Dharmesh Mistry, which is DHARMESH.
Fantastic.
MISTRY, all one word.
Fantastic. And we'll when we publish this episode, we'll include your LinkedIn handle anyway, at least, so people can find you that way. But fantastic. Thank you again for coming on the show and sharing some great experiences and insights with us here today. And sorry to you all for my daughter calling me towards the end of that episode. I've learned now, please put your phone on to silent fly mode when you're recording an episode. But mostly importantly, thank you to all our dear listeners, all of you out there, both old and new, for hanging out with us today and all of our other episodes. I really, really hope you've enjoyed it. Ville and I really enjoy having these discussions with our guests. I'm going to ask you to get in touch with us. Please go to your podcast channel of choice or our YouTube channel if that works for you. Hit the subscribe button, the like button, and please, like I said, leave us some comments. Tell us what you're liking, what you're not liking, and what you'd like to hear from us in the future. Those comments actually really do help us. It motivates us to keep us going, but it also helps us with our scoring and ranking. And the higher up we get, the more we get motivated to bring fantastic content like this to you. So do send us all feedback, comments, jokes, guest requests, memes, whatever you've got. So you can send them to us via email at hello@fintechdaydreaming.com. Ping us on LinkedIn, Twitter, YouTube, Instagram, or the Anchor FM page. Get in touch, whatever the case is. We'd love to hear from you. We also particularly appreciate if you, like I said, can hit that subscribe button on YouTube. It helps us to grow and really is nice for us. Ville and I will be back in 2 weeks' time, but we have yet again been given the fantastic pleasure to host a live episode at the annual Nordea event, which happens to coincide exactly with our publishing date on the Thursday and Friday of that week. So to give us a little bit of time for post-production and editing, we will be publishing that episode a little bit later than usual. But don't panic, it will come a day or two late, and then after that, we'll be back on the normal schedule. We've really enjoyed this. We're glad that you've stuck with us for this episode and look forward to sharing some great ideas and insights with you again in 2 weeks' time. This has been Fintech Daydreaming.